Hello guys, my name is Moshe Ansari and today we are going to analyze KPIT Technologies. So we are going to analyze its fundamentals and its technicals too. So let's start with the it is technicals. KPIT Technologies. So basically, as we can see that currently the stock is down by the 32% from its all-time high. It has met the all-time high of around 1900 and currently it is trading at 1285. Quite we can say that as per the it is all-time high, we can say that it is trading at it is at the discount level, right? And okay, and now it was moving towards the downside and now it has pulled back. Okay, so let's go with the it is technical fundamentals part. Okay, KPIT Technologies. So let's check what the companies do. So KPIT Technologies company with us, it is a software solution that will help mobility leapfrog towards the automation, autonomous, clean, smart, and connected future. With 13,000 automobiles across the globe, specializing in embedded software, AI, and digital solutions, capability enable customers accelerate implementation of next generation mobility technology with development centers in Europe, USA, Japan, China, Thailand, and India. Quite diversified towards the different geographies. Okay. Product segment, feature development and integration 62%. Okay. And architecture and middleware consulting 90%, and cloud-based connected services so 90%. So basically, the company is going to benefit from the more AI developments, and as we know that the AI is the future of the world, so it is going to be benefit from that. Okay, and it is a mid cap, as we can see that 35,000 crores market cap. So let's go with the it is ratios. Stock P is currently 43 and the membership is 30. So basically it shows that currently the stock is quite trading at a premium. Promoter holding is 39%, 39.4%. That's quite low. It should be above 51% because this is what I prefer mostly. Let's we are going to analyze the promoter holding trend. Okay, so let it be for the later. Okay, interest coverage quite good because company have we can say almost zero debt. Okay, EPS growth for the 5 years 40%. That's very good, and quick ratio is 1.52 and current ratio is 1.57. That's quite good. And book value is 106 and current market price is 1285. That's around 11 times. No, sorry, price to book value is around 12 times. As we know that Indian companies have too much growth potentials because India is an emerging nation, and that's why it is quite justified. Okay, return on equity good. Okay, change in promoter it is acceptable. It is not that significant. Sales growth for the 5 years is also good. Average dividend payout is 3 years 29%. Dividend is 0.66. That's quite good because it is not a mature company or a large cap that pays dividend. So even though they are paying dividend, it is a good company. Okay, EV to EBITDA is 25. That's quite acceptable. PEG ratio there is a 0.99. That's close to the one. That's acceptable. That's good. Okay, not acceptable. It is good. And let's compare. Let's check out the trend of the P and EPS. Okay, so basically in Jan 21 the company was having a 28p along with the EPS of 4.7. Now in the and in Jan 22 the company was having a 85p along with the EPS of 8. Okay, and in so basically EPS of 19 and P not shown here. Okay, maybe not calculable because of some reason. Okay, we can see that. Okay, with the APS of in the March of 24, the company was having a PE of 80 and with the APS of 19, quite good, quite good. And in the Jan 25, company was having a PE of 49 and the APS of 26. Okay, quite great. And now company have a PE of 43 around and a APS of 29. We can say that as per the trend of P and APS, it is company is quite undervalued. Okay, as per the P and APS trend. So let's analyze the latest quarterly results. As we can see that year on year sales growth for the company is coming in the double digits. We can see it is quite excellent, we can say that. And what's going on? Okay, as we know that it is a IT based company, they have to incur not a material cost, they have to incur the employee cost. So as we can see that, so basically if they want to increase their margin, they have to reduce the employee cost. So and that is what we are saying here, from 66 to 63. So that leads to the increase in the margin from 19 to 21 approx. Now it is reduced because of some reason maybe. And the interest obligation remains low because it is a nearly debt-free company. Depreciation and expenses has been increasing over this. That shows the company is doing capex. Maybe they are buying more assets for them. And the net profit from 88 to 172 within the 3 years, that's quite good. Or it is around 2 times within 3 years. That's quite excellent. And the company having a sales growth from year on year, we can see that from 2000 to or nearly 6000, but we can say around 2.8 times. Company has increased their sale around 2.8 times within the year 5 years. That's excellent. And expense ratio, as we can see that employee costs have been increased here. I don't know why. Initially they were able to reduce the employee cost in the quarterly result. We have saw that, but now it is look like it is been increasing over the years. Okay, operating profit margin, but still they are able to generate a higher operating profit margin because manufacturing costs have been reduced here. We can see that interest obligation is quite very low, and depreciation is increasing over the years because they are buying more fixed assets, as we can see that. And their net profit from 55 to 800, quite excellent, we can say that. Okay, now analyze the balance sheet. As we can see that company have a good equity capital. They are increasing their reserves over the years. That's quite excellent. Borrowings, as we can see that long-term borrowings have been reduced. We can say it is become nil, and short-term they have a very low short-term borrowings of 2 crores. They have lease liability, right? They have lease liability, which is not a big concern. Fixed assets, as I told you that they are actually investing for the fixed asset from 420 to 1900. That's quite excellent. And still there is a current capital working progress is going on. They are also actively investing in the investing, as we can see that. So basically they have generated cash flow of 450, 1000 and 1400, right? 1400, 200, 2400, 2600, 2700 crores. Okay, within 3 years. And let's compare with the profit and loss. Okay, 800 around 2004. Okay, that's good. They are able to collect all the cash, which is whatever they have sold. They are able to collect the cash. Okay, that's quite good for the company. Cash from investing activity. As I told you, they are actually purchasing the assets, as you can see that. And investment, they are also actually purchasing investments. Okay, they proceed from they are also diluting very little shares. That's not quite a concern for the company. Proceed for the borrowings, they collected cash from the borrowings here. They also repaired them also at the same time. Debtor days, as we can see that debtor days has reduced and it is quite low. At acceptable, inventory days had not given. Cash conversion cycle is quite low. This is acceptable because net working capital is being stored for the only 50 days. We can see that's quite acceptable. Promoter holding is reduced only by the we can see hardly 1%. FII is as we can see that FII has was increasing their stake in the company till December 23, but afterwards they have reduced their stake in the company. DI is also reduced. No, sorry. DI is increasing their stake in the company, and the public is reducing their stake in the company. Basically, DI is it is a good sign that the DI is actually investing in the company, and also FI is having their investment in the company. So basically, if you want my suggestion, it is a good company to buy for now. For now, it is a good company, but we have to closely monitor the company because the company is not that much old, and we have to watch their each quarterly results. So, in order to update our portfolio according to the company's performance, and till now, company is doing very great. So, thanks for watching. Have a nice day.